Hello everyone, welcome to another episode of Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 3rd of December, 2024. Alright everyone, let's get into it. So, we have a big week of ETF flows for ETH last week. Now, I remember I did say that I wouldn't be covering the daily flows because I kind of felt like there were noise, but there are some days that I think are worth covering, and that day was last week, on the 29th of November. On Friday, we had ETH's biggest inflow day ever of a $332 million inflow day. This was bigger than BTC's day on the same day, and we also had 250 million of that coming from BlackRock, which was bigger than what I guess like went into the BlackRock BTC ETF there. So quite a big day, obviously, and that whole week was quite big. As you can see, we basically had net positive days pretty much every day. The 28th was obviously Thanksgiving in America, so there was no trading on that day, but the 29th was a really big day there. And then today, obviously, or yesterday, I should say, on Monday, we had another net positive day of 24.2 million, but we did have a bit of outflows from Grayscale here. But really what I kind of wanted to just touch on here was the trend. I think the trend of flows kind of going up with the ETH ETFs is going to continue, especially because we're now pretty much like over the price point of when the ETH ETFs launched. If you'll remember back when the ETH ETFs launched, I believe ETH was around $3,600 back in July 23rd, which is the launch date. Obviously, the approval date was May 23rd. So if you had bought the ETH ETF on that date, you had not been in profit for quite a while, but now you are in profit or at least break even. And that means that investors are going to see that chart and say, okay, well, ETH initially went down after the ETF launch because there's different tickers and different charts for the ETFs. And then they're going to see it going back up. And obviously, I mean, it's not an all-time high, obviously, but it's the high on the ETF chart there, and they're probably going to FOMO in or want to kind of get more exposure here. I want to know why it went back up, right? And this is kind of reflexive, and that's that reflexivity that I think a lot of people are aware of at this point. A lot of people talk about at this point, but obviously very positive here. Now, of course, ETH is not at all-time high yet. The market is going absolutely crazy, though, across the board. We've all seen what happened to XRP over the last couple of weeks and a bunch of other assets just going absolutely insane. And the funny thing is, if you actually go to the charts of these assets, you'll see that they basically are dead for pretty much like most of the cycle. Like if you think about the cycle as a 4-year thing, they're dead for like almost all of it except the end of it. As I said the other day, I believe we're in like we're not at the end yet, but we're at the later part of this cycle, right? Where the bull market is, in my opinion, going to end in like 3 to 6 months. It's very hard to kind of know where it's going to end. That's why I give a kind of range there. But if you're looking at the market right now and think this can sustain itself for longer than that, I don't know. I don't think that's the right way to think about it, just because of the fact that one, a lot of money is required to keep the market at this level, even at this level. And I think it's going to go further than this, but that's a big thing there. Two, there's a lot of unrealized gains right now. People aren't selling yet or taking profits yet because everything's so bullish. It's kind of this weird thing where you would expect people to be taking profits because they've made a lot of paper gains so far and because things have gone up, but their expectation that things are going to go even crazier is higher than their want of cashing out right now. So essentially what happens is that's that reflexivity kicking in, where essentially when you have very little sellers, even though they have a lot of unrealized gains, and you have this flood of new money coming in from both retail investors and now institutional investors, prices will go up. But eventually that reaches a kind of equilibrium point where people have started taking profits, and now though that money is kind of rotating through, that unrealized gains become realized, and yes, it can go higher, but eventually the music stops. Eventually it's like, okay, well, there's way too much people kind of selling now, there's way too much gains being realized, and then we obviously have a big crash. And I don't know how many of you remember May 2021, but that was a brutal crash. I think ETH went down 60% in a week, like from that top. And then obviously we had a second top on November 2021, but there is a lot of evidence that points to that being driven by fraud, being driven by FTX and Terra and Three Arrows Capital and all that sort of stuff there. So I'm not sure I expect that this time around. There's always like that dead cat bounce, that it's a technical name for it, but essentially what happens is that the cycle top is in, the market tanks, and then it goes sideways for a little bit, and then it goes up again because everyone's like, oh, this was just another bull market cool off, we're going to continue from here, and then it tries to go up again but falls short of all-time high and then goes back down, and that kind of confirms to the market that the bull market and the bull cycle is 100% officially over. So I think we're going to have like that traditional kind of topping pattern this time, rather than what we had in 2021, because that had been the pattern pretty much like every other market cycle, and that is a more natural pattern. It's not something that's driven by fraud or anything like that. But there's no guarantees here. So that's my general view right now on how things are going. As I said on I think the last episode or the episode before, you should really, like, at this point in time, be thinking about your sell plans. Honestly, I know that there are a lot of people out there who will tell you that you shouldn't sell, or you should only hold, don't sell because fiat's going to zero, blah, blah, blah. But at the end of the day, right, like, fiat's not going to zero tomorrow. Like, especially US dollars, it's not going to zero tomorrow. It could maybe go to zero in like 50 years or something like that. Or, I mean, I guess when we say go to zero, we mean like become so worthless that it turns into one of those other fiat currencies that have hyperinflated, right? I don't think it's happening anytime soon. But at the same time, you don't have to like stay in fiat forever. You can sell, take those profits, go buy the things that you want to buy with it, whether that's maybe like buying a house, buying a new car, paying off debt, whatever you want to do with it, go do that, and then use whatever you've got left over in the end to either get back into the market if you want to, once the bear market hits and once things have cooled off, because as you guys know from the cycles, that's the best time to buy things, and then go from there. There's no point like just like perma holding anything unless for you don't have a reason to cash out. I think that's kind of my logic around ETH, where it's like, I don't have a reason to sell my ETH. Like, I just like it sitting there. As you guys know, most of it is solo staked. I enjoy doing solo staking. I enjoy keeping on top of everything. I enjoy just watching my ETH balance go up because I'm staking, right? I'm getting the rewards from the block rewards, but also from proposing blocks. The issuance rewards and the proposing block rewards there. But yeah, that's generally my approach to things. But I'm in a different position, I think, to a lot of people. So you have to do what's best for you. But yeah, as I said, I do think that things are just really stupid right now, really heated right now. There are going to be, I don't know when it's going to happen, but there will be like 20-30% corrections across the board. That's just what happens in bull markets because, as I said, people start taking profits. But because the bull market, I guess, structure is still intact, those people may just buy back in like straight away, or there might be just a flood of money coming in that overwhelms that, and things continue up. But eventually, it ends. There's no such thing as a super cycle. There's no such thing as up only. Things will have cycles. And it probably won't be. Look, maybe I'm cursing the market by saying this, but for BTC and ETH, it probably or might not be as violent as it has been in the past. But for everything else, I do expect them to get like absolutely slaughtered, 80-90% down. Like, I do not expect those things to act any differently, especially things that have gone up a lot for absolutely no reason. Like, if you can't actually point to any fundamental reason, I'm talking about anything at all, for things going up a lot, it means they're literally just going up because profits are rotating out of things. You can see it happening right now. BTC went to almost 100K, and now it's been like range bound between 90 and 100K. Why do you think that is? Well, it's two reasons. One, people are taking profits, right? And two, people are taking those profits, but they're not putting it back into BTC. They're putting it right into the rest of the market because they're like, well, I can earn even more money now because BTC has done its run. 100K is this psychological level. I'm just going to cash out and go play with other things. That's why ETH will eventually get to all-time high, or at least one of the reasons why ETH will get to the all-time high. I believe it's going to happen in January. I don't know if it happens in December. December's a weird month, I think, for markets. It's generally a hot month, but for ETH, it tends to like seasonality kind of kicks in mostly in January for ETH. So I do expect the all-time high probably in January at this point. But outside of that, just generally, you can see the money flowing out of BTC into everything else, and it's doing it indiscriminately. The whole market's just going crazy, right? So as I said, like this is the final stages of the cycle. This is the real kind of like bull market that I've been talking about for a long time. Because I remember during the run that we had from October 2023 to March 2024, I said that retail wasn't here yet in any real way because it was a BTC driven run, and then it was a crypto native driven rotation from BTC into other assets like meme coins, for example, or very popular crypto native coins. But if you look at what's happened over the last few weeks, especially since the election, the coins going up are not the ones that everyone on crypto Twitter is talking about. It's the ones that the people outside of that bubble are talking about, such as the YouTubers, the TikTokers, like all these old kind of dino coins, as we call them. They're the things going up the most because they're the things that retail investors generally buy for whatever reason. And you can go on CoinGecko today and look at these things, right? IOTA, Algorand, XRP, Hashgraph, like these things are all things that like have really no fundamental value to them, but retail for some reason loves these things. Whatever the reason is, maybe because they just buy what they hear about on TikTok and on YouTube. Wherever else, that's what I mean by a retail-led bull market. And we're in that. We'll be in that for the next few months, I think. But there's no way to know where the top is. That's why I said to you guys, you should have had a sell plan put in place a while ago. But you can even set one up now, and you need to be like DCAing out. There's no point trying to time the top. You'll never time the top. Like even the best traders and investors in the world will not time the exact top and the exact bottom on things. They tend to, I guess, as you get more experience, be able to tell, I guess, you be able to get as close as you can to the top and close as you can to the bottom. I've been able to do it on the bottom side. On the top, it's kind of way more difficult. But with the bottom, I was able to pick the bottom on ETH this cycle, which was pretty fun. But I would say that most of that was also luck because it could have gone lower. But you get to this point in the markets where you're just like, well, I feel like these kind of things have been slaughtered enough. I feel like enough pain has been felt by the market. I'm going to kind of buy in here. And as I've explained before, and I've shown it with charts, you actually have way longer to buy the bottom or near the bottom than you do to sell at the top. You have like, I don't know, 6 to 12 months to buy like the bottom / crab range. To sell the top, you have like, on even BTC and ETH, you have like maybe a month, not even, to do that, or sell near the top sort of thing. To sell the actual top, you have like a couple of days, right? So it's all about the timelines here. But yeah, anyway, I've gone on a bit too long. I didn't expect to go on that long about the markets there, but obviously it's very relevant right now because the markets have gone absolutely crazy. And I'm sure a lot of you guys are questioning things right now, like when do I sell? When's the top going to be? Blah, blah, blah. I think the one piece of advice I can give here is don't worry about where the top is. Don't worry about when you should sell. Worry about what's best for your individual situation. Like when you should sell is obviously based on your individual situation. Don't look at a chart and say, okay, well, I'm going to sell ETH here. I'm going to sell this asset here because at that price point, the chart looks really stupid. So that's what I'm going to sell. No. That's not the right way to do it, in my opinion. The right way to do it is to assess your own individual situation, assess how much money you can realistically make from things and how much money you'd be happy with. And then even maybe discount that because you're always going to go higher. You're going to be like, okay, well, if I make X amount, that'd be really cool. I can do this, this, and this. So maybe like lower that and be more realistic about it and say, okay, well, maybe I'll just make this much and start kind of DCAing out a bit there. And it's going to go higher. You're never going to sell the top, but you shouldn't buy back in after that either. That's one of my bull market pro tips. Don't try and chase things, right? Once you've sold, like if you sell 10% of your stack and you have those profits, those fiat profits, lock that in. Don't just jump back into the market and think because it went up again and be like, oh, I got to get back in. It's going back up. No, don't do that. That's the quickest way to get wrecked. That's how most people lose money in bull markets, by chasing things, by rotating through things. I wouldn't do that. Again, individual situation is the most important thing. Just pay attention to that, and I think you'll be okay. But anyway, enough on the markets. There's a lot of other stuff to get through today, which I'm going to jump into. So first off, we had the Beacon Chain's 4th birthday on December 1st. So those of you who were around back then know what a monumental event it was to get the Beacon Chain live for Ethereum. It was a proof of stake Ethereum being live for the first time ever, and it was a journey to get there, that was for sure. But it is 4 years old now, as Justin Drake puts in his tweet here. And the reason I'm highlighting this tweet isn't just because of wanting to celebrate the Beacon Chain's 4th birthday, but also the fact that there was one part of Justin's tweet that I really kind of liked. And it was basically this part towards the end where he says, I believe Ethereum can get it all. So if you watch Justin Drake's Bankless podcast that he did, I think it went live like yesterday. You should go watch that. There's this kind of narrative that I don't really like that is perpetuating out in crypto right now, that Ethereum is fighting like a 3-front war. It's fighting Bitcoin on money, it's fighting Solana on execution, and it's fighting Celestia on data availability and roll-ups as a kind of like scaling mechanism there. And I think that's the wrong way to think about it, because I don't think Ethereum is fighting these things necessarily. Ethereum has been trying to do its own thing since at least 2020 in terms of the roadmap that Vitalik published back then, the general roadmap and the roll-up centric roadmap. So Ethereum is not exactly warring with things. And I also think that pitting something like Celestia against Ethereum is retarded, like if I'm being honest, because Ethereum is like, if you're going to use like some sports analogies here, Ethereum is like a top kind of in its field, right? A top player in its field. And then Celestia is relatively new. And I'm not trying to badmouth Celestia or anything like that, but it's relatively new. It still needs to win battles against its own competitors before it can challenge Ethereum at anything. It still needs to win battles against EigenDA and Avail and NearDA, like these other DA layers that are competing with Celestia. And I know that recently Celestia has kind of pivoted to being more of a full-blown layer 1. And I did call this a while ago. I think I said this in the Daily Gwei Discord channel years ago, that there's no way they're going to stay like just a DA layer or just a sovereign rollup layer. They're going to actually become like a full-blown layer 1, which they have at this point in time. But if we're just looking at it through the lens of like DA, which is what it's known for, it has to compete with these other things first and emerge as the winner there before it can even have a shot at Ethereum, in my mind, at least. And I also don't think it's worth comparing them because they're completely different beasts too. In terms of execution, again, it's kind of a weird thing because Solana execution is not competing with Ethereum L1 execution, at least in my opinion. It's competing with the L2s, but it's also not competing with every L2. I would argue that things like Mega ETH and Rise and these kind of like mega L2s that are trying to essentially just do one beefy L2 instead of like a super chain of L2s, those things are competing with Solana. So the I guess like the more modular kind of mini L2s, like app chain thing, that I think is more competing with the original Cosmos vision. So, but at the end of the day, it's not even a competition because most of Cosmos is, there's not really much traction there, right? And I think Polkadot also has like a similar architecture now, but again, there's not much traction there. So I really don't agree with this like three-pronged kind of war thing. I agree with one of those prongs, and that's Bitcoin. I do think that ETH is competing with BTC to be the premier digital money, digital store of value. And I do think right now, obviously, it is not winning that at all. Like, I mean, Bitcoin's market, the barometer for success there is market cap, honestly. There's not really anything else we can really point to in that sense, in terms of what the I guess, wider population understands. So until ETH market cap is bigger than Bitcoin's, you can say that Ethereum is not winning there, but Ethereum is definitely competing there. And I don't think anything else is competing in that arena for money. But there's other two prongs I just don't necessarily agree with. But Justin Drake attacks these head on. He basically strawmans it and says, okay, well, let's just say Ethereum is competing with all these things. Here's why I think Ethereum can win across all of these. And that's why he says in this tweet, I believe Ethereum can get it all, because he believes Ethereum can be everything to everyone, basically. And so do I. I believe Ethereum can have it all. I believe that, as Justin says here, the L1 improvements that will ship will ship incrementally for years to come, and Ethereum L1 will win as like the strongest L1. I actually think it's already won that as the strongest L1 right now, in terms of, I guess, what it's trying to be as an L1, because it's not trying to be an L1 that specializes for execution or does like mega execution like something like Solana L1 does, for example, right? But I think it's already won what it's trying to be, which is the settlement layer. And then on DA, it's got a lot of stuff to do with data availability, obviously, which I'm going to talk about in a sec with regards to blobs and increasing the scale there, but it's competing there. And in terms of money, I mean, honestly, the money thing's a bit funny because there's not really like anything that you do to improve it as money or anything that we're going to do in the future. We've already done like the two major things, make Ethereum proof of stake and integrate EIP 1559. Maybe you could argue something like MEV burn and a possible issuance reduction, or the endgame issuance curve that has been talked about a lot recently. Maybe you could say that those two things are the final things to implement, and then we've got like an ossified monetary policy for Ethereum. But those things are still open questions there, and I don't think they're necessarily critical for ETH to be a better money and a better store of value than BTC there. But you can read Justin's whole tweet. I'll link it in the YouTube description below. But that was just some of my thoughts on it. And definitely go listen to or watch Justin's Bankless podcast. He goes through all of this in much greater detail than I do, it's always a great listen listening to Justin there. All right, so as I said, L1 scale is something that we're working on, as I was talking about just before, and something that's being kind of incrementally done over the next few years. But there are different types of L1 scaling, right? Like, as I said, Ethereum is not trying to scale L1 to be this mega execution layer like Solana is, right? We're basically saying, well, the L2s are going to do that, right? The L2s are going to do the execution part of things, but at the same time, L1 has execution on it too. So what can we do to actually improve that for users at L1, because there's still plenty of users at L1, especially bigger players, and also improve it for the L2s. One of the things we can do without a hard fork is increase the gas limit. Now, I've talked about this before. I'm not going to rehash the whole gas limit thing here, but what was interesting was that yesterday, Dan Crad here on Twitter said that he thinks it's time to increase the gas limit. And he says, if you run a validator, you can contribute to this. Every block acts as a vote on whether to increase it. If more than 50% of the stake agrees to an increase, the gas limit will increase. And he says, I just set my validators to vote for up to 60 million gas. Now, I think that's too much. I honestly don't think we should go to 60 million right now. As you guys know, I've increased mine to 40 million. I think that's okay. Right now, it's 30 million to 40. Going to 40 million is a 33% increase, but I think the way we think about the gas limit and the way we talk about the gas limit is a bit broken right now. I would like to pose something a bit different. And that was something that was, I read a comment. I think someone replied to me with a comment. I can't remember their name right now, but if they're listening to the Refuel, please chime in here, maybe in the YouTube comments. But essentially, what we could do is incrementally increase it at some kind of defined interval. And then if something breaks, we can revert it. And what I mean by this in practice, let's say every 6 months we increase the gas limit by like 5 to 10 million. Now, if something breaks, aka we lose like a large cohort of solo stakers, and the reorgs on the network go up because solo stakers can't keep up anymore, it's just too much load on them, then we can just revert that change. And that change, as I said, doesn't require a hard fork. It's done at the client level. It can be done at any time. And it can be done network-wide here. So if there is an issue, we revert. And then we just do that every 6 months. Instead of this kind of, I guess, wishy-washy thing that we're doing today, where essentially the validators and the node operators, they have the power to increase the gas limit at any time they want. But in reality, even though they have that power, they only exercise it when they're essentially kind of given the green light by core developers and researchers. And you can see right now, actually, Data Always put together a really nice kind of Dune analytics dashboard here, which I'll link in the YouTube description below, which queries the network to see how much percentage of the network is actually increasing the gas limit above 30%. It's at around 1.8% right now, which isn't enough. Like, obviously, it needs to be 50% or greater here. And most of that is due to Nethermind. They tweeted out here saying that Nethermind has increased their gas limit target on around 1% of all mainnet validators as a signal towards the gas limit increase. They didn't specify what they've kind of gone to, but obviously it's higher than 30 million, which is adding to this here. But this query is cool because it means we can see in real time how much of the network is actually signaling this here. But in saying that, I still think the way we do it is just broken. It's not right. It's not great. It's not conductive to, I guess, like a streamlined process. And as I said, I would rather see something like a social commitment to every 6 months, we just raise the gas limit by 5-10 million, and then we see if it breaks anything. Or we do it as a percentage raise, because obviously 10 million on 30 million is different to 10 million on 40 million. So it could just be a percentage, but I'm using absolute numbers just to get my point across here. I think that's a better way of doing it. I don't know how we would actually get that through, I guess, so to speak, or how we would actually kind of make that happen. It maybe needs to be done at the client level, where the clients basically set this up and make it easy for people to change this. I mean, it is already pretty easy to do it, but maybe it needs to be easier. I don't know, but essentially, I think that is the better way to do it. Just set a kind of time limit thing, so every 6 months, raise it by some percentage, and if something breaks, we can just revert it back. And it's really easy to revert it back. It's really just, the hardest thing is just the coordination thing and getting the message out there, but the message can be propagated quite quickly, especially because the big node operators especially will be noticing this pretty quickly if something is wrong. So yeah, that's my general take on that there, but you can go check out that dashboard. As I said, I'll link it in the YouTube description below for you to do so. All right, last thing I wanted to talk about when it comes to L1 scaling. Now, I mentioned execution before. So Marek here from Nethermind put out a great little tweet here, quote tweeting Dankrat about the gas limit. But essentially, there is these kind of 3 paths you can take when scaling L1. You can take the left path, which is not scaling L1 at all. You can take the right path, which is hyperscaling L1 by sacrificing security and decentralization, or you can take the middle path, which is scaling L1 through software and protocol improvements, hyperscaling with L2s. Obviously, that is the path that Ethereum is taking right now. That is the path that we've been on for quite a while now. That is the generally agreed upon path within Ethereum altogether. It's just like, basically, don't sacrifice what we have, which is security and decentralization. Don't not scale L1, but scale it in a way through novel software and protocol improvements, and also like following hardware improvements over time, in order to scale up the L1 without sacrificing the properties that we like, and then hyperscale with L2s. So I thought that was just a really great way of describing the 3 different paths that you have here. People will disagree with this. People will think that there's different paths and there's different kind of properties to each of these paths. But the way I see it is that those are the 3 high-level paths. Not scaling L1 at all is essentially what Bitcoin chose to do, or I guess like you could say barely scaling L1 at all, because they technically scale it a little bit with things like SegWit, but yeah, I mean, it's barely anything, right? But then hyperscaling L1s by sacrificing security and decentralization is something of the path that Solana took, for example. But then the path in the middle is the one that we want to take. And that is, I mean, fortunately or unfortunately, depending on how you look at it, that is the long-term path. It is not something that's happening overnight. It's something that's happening over the long term, and people are getting patient about this too. I'm sure over the last few months, you've seen a lot of people talk about accelerating the L1 scaling, I guess, roadmap. I'm all for accelerating it, but at the same time, I think that at this point, we're not so much accelerating it as we are just making sure that we catch up to where we should be, because L1 hasn't really been scaled too much in the last kind of 2 to 3 years, especially when it comes to the gas limit. So I think that's why there's been a lot of talk about raising the gas limit, because it's like, well, it hasn't been changed in 3 years. Hardware's obviously improved in that time. I know that bandwidth is a separate discussion here, and that's exactly why I said that we should increase it incrementally, and then if we break anything, we can revert it. But yeah, I kind of vibe with that too. So essentially, let's scale L1. Let's make sure we keep up with what we're supposed to be doing with scaling it as over time based on like hardware improvements, but also realize that hardware can only get you so far. You have to scale through software and protocol improvements, which is exactly what we're doing, but that's more of a longer term thing, and it's not going to happen overnight there. All right, moving on to Blobs. So I think I've discussed this a couple of times on the refuel in November, but essentially Ethereum Blobs were at target every day in November. Oh, sorry, almost every day in November. And as you can see from this chart, we had a couple of days where they weren't at target, but they were basically there anyway. And this generated millions of dollars of fees for Ethereum L1. Obviously, the Blobs aren't free when they're at target or above it here, because it goes into price discovery. And also on top of this, we had an announcement during the week that we're going to be increasing the Blobs from 3/6, so target of 3, max of 6, to a target to a target of 6 and a max of 9 in Pectra. This is pending further testing, but if everything goes well with the testing, that increase is locked in for Pectra now, which is obviously really great to see. And that is a double, right? Like it's going from a target of 3 to a target of 6, max of 9, and a max of 6 here, which is going to give a much needed boost to rollups and much needed boost to Ethereum DA consumers, because of the fact that we are at target and we've been at target for a while. L2 fees are slowly creeping back up. I know sometimes during spikes, people are paying up to like 30, 40 cents on base. That's during the spikes, but the average fee has crept up from like 1 cent to I think 3 to 4 cents or something. And that is a direct result of, I guess, more base usage as well on the execution side of things, but also the fact that blobs have reached capacity and they're saturated, and those blob costs get passed on to users. So we definitely need this, 6 to 9 increase, which is pretty much locked in for Pectra at this stage. And related to this was another tweet that Nixo put out, which essentially basically outlined how we went from the, start of people wanting a blob increase to where we got to rough consensus. So essentially what happens in Ethereum governance is that you put forward an idea, you, get rough consensus from different parts of the community, you do a lot of research and development on it, you do a lot of testing around it, and then eventually you can get the rough consensus to put this into the network. And Nixo outlines the timeline here. It's a great tweet. I'll link it in the YouTube description below. She also provides sources here to each of these points, but essentially this happened over a period of a few months, and there was that research that I think I went over on the last episode from ETH Panda Ops that basically showed that we can safely increase it to 6/9 without losing most of the network and without affecting most of the network negatively. So this is just outlining that timeline there. So that's a really great tweet from Nix. I'll link it in the YouTube description below for you to check out. All right, moving on. So this is an EIP that I spoke about quite a while ago, I think. It was originally proposed in 2013, and I remember talking about it 2023. I remember talking about it back then. This is EIP 7503, which is zero knowledge wormholes, or enabling privacy on Ethereum L1 for ETH transfers, so private ETH transfers. Now, I think when I first spoke about this, the main issue with this was essentially the fact that if there was a bug in the implementation of this EIP, it could result in an unlimited minting of ETH, which obviously would be very bad. So that's like one of the worst case scenarios for bugs in the Ethereum protocol here. But the reason I'm bringing it up again today is because Tim Byko brought it up again the other day, where he was replying to I think, someone about privacy-related things. But the cool thing about this EIP and why I would love to see this integrated into the network is because, yes, there is that massive kind of, risk of there being that bug there, because the way it works is essentially you can do private ETH transfers on layer 1 because you send ETH to some kind of, I don't know if it would be like a contract or something like that, or you send ETH somewhere, it would essentially burn that ETH and then mint you that new ETH on mint new ETH and then send it to a new address, and there was no way to link the two addresses together. That's the basic premise of it. And this would only be for ETH. This wouldn't be for any other kind of coins like stable coins or tokens on Ethereum. This would just be for pure vanilla ETH, not even for wrapped ETH or any ERC20 tokens. It would just be for ETH. Now, the reason why why this is cool is because not only can you do private ETH transfers, but you can build stuff on top of this. So you can do these things where essentially you can do a private ETH transfer, but then you can make it so that it sends that ETH after to a smart contract, which then does a bunch of complex stuff. And essentially you have like private smart contract interactions because of that. There are some other things you can do, but that's essentially the high level thing there. And also this can be replicated on the EVM layer 2s as well if they wanted to implement this. So there is like mostly positives with this, but as I said, the big negative is the fact that there could be a bug and it would result in lots of ETH being printed. Obviously, the price of ETH would crash. The bug would be fixed. Like, don't get me wrong. It's not like we would keep the bug in the network. It would be messy as hell, but the bug would be fixed. We basically reverse the bug. There wouldn't be unlimited ETH anymore, and it would probably get fixed pretty quickly. But that bug happening is, I guess, in terms of worst case scenarios for Ethereum, that is like the worst case, I think, because not only is it like a bug to mint unlimited ETH, which destroys ETH's monetary properties and destroys kind of a lot of ETH's moneyness and store of value kind of story, but also it would require either rollback of the chain or an irregular state transition, which at this point in Ethereum's life it wouldn't kill Ethereum, but it would be so detrimental to it, and it would be something that got constantly brought up as a piece of FUD that we couldn't really refute because it happened, that it would be very detrimental to Ethereum's story. So as much as I really like this EIP, if there's no way for us to guarantee that there wouldn't be an unlimited mint bug in it, then I would be very against putting this into the network, because that bug, even if there's only like a 0.001% chance of that bug happening, I still think that's too high. And there are ways to maybe not guarantee no bugs, but like get as close as you can to guaranteeing no bugs through things like formal verification. The actual EIP could be potentially just a few lines of code, so it's much easier to reason about, something like the wrapped ETH contract. I don't know if it's that simple, maybe not, because of the fact that it's using a bunch of complex things like zero knowledge in order to I guess enable this. But yeah, unfortunately, the risk of a bug is there, and that risk is what's turning people off of this, and that's why this EIP has kind of fallen into like the stagnant bucket of EIPs, where essentially no one's really focusing on this right now. And there are honestly other ways to do privacy and potentially better ways without these risks, so we'll see what happens there. But it would be cool if we had this, because in my mind, it's the holy grail of privacy for ETH transfers, and also for more complex things that could potentially be built on top. All right, we have another update about statelessness. So this is the Verge part of the Ethereum roadmap, as you guys know. So the TLDR of this is that there is going to be a new AIP for binary tree-based version of statelessness coming soon. As you guys know, they've been working on the Verkle design, and the binary tree design is just a different design. So there's MPTs or Merkle Patricia trees, which is the one that we've got currently live on the network. Then there's Verkle trees, which is one of the designs, and then there's going to potentially be binary trees. And then there's one more than that, which is based on Starks, I believe. There's a Vitalik tweet here, which I'll link in the YouTube description below, that talks about what binary trees are and how they're potentially better than Verkle, but then how there is something beyond that, which is using Starks as well. So essentially, why I wanted to highlight this was because it shows to me that the team working on the Verge part of the roadmap is not married to Verkle trees. They will change things if they need to something better, and it seems like they're going to be doing that with this new AIP for binary tree-based version of statelessness. So you can read the full update. I'll link it in the YouTube description below, but I just wanted to highlight that there for you guys. All right, last up, I just wanted to talk about this new blog post that Kane posted titled Infinex V2. Now, you might be wondering, V2, V1 isn't even live yet, or I guess like there wasn't much that happened with V1, and you'll be right. I mean, Kane makes a joke about this in this meme here from The Simpsons when Leonard Nimoy says, "My job here is done," and Barney says, "You didn't do anything," and then he says, "Didn't I?" and just disappears, right? Well, yeah, I mean, I love Infinex, I'm super bullish on it, but V1 was very limited. It really just existed to mostly do the crate farming, the bull run game, the trading card game that they did, or not. I mean, it's not really a trading card game, but you know what I'm talking about. And obviously the patron sale, the sale of their NFTs there. But this post talks about what Infinex V2 is and how they basically re-architected a lot of their backends in order to make V2 much more extensible than V1 ever was, and they'll be able to move a lot faster now because of this. So go give the blog post a read. I'll link in the YouTube description below. But essentially what they want to deliver to get to parity with Binance, because as you guys know, Infinex is trying to be on-chain Binance. This is the list here. So they want to support for the top. They want to support the top 2,000 crypto assets. Now, this doesn't just include Ethereum and its tokens and other networks and their tokens. This includes things like Litecoin and XRP and Cardano, like pretty much everything in the top 2,000 crypto assets. And then they want to support all the usual things you see on a centralized exchange, like spot trading, margin trading, perp trading, options trading. They also want to support NFT trading, staking and yield farming, airdrops, borrowing and lending, and a launchpad feature too. So they're trying to do it all. They really are trying to be on-chain Binance. And honestly, if I was to bet on any team to do this, it would be the Infinex team. You guys know I'm super bullish on this. I bought a bunch of the Patreon NFTs as part of their sale, and I locked them for the full lock. So I bought them and locked them for the full lock there. They're still just going to sit in my account. Like I have no, plans to sell that or cash that out anytime soon. I'm really betting on this team to be able to execute this, and I really think they can. I've spoken to a bunch of them over the course of the last few months. I've spoken to Kane a bunch. Like he's really driven to deliver this thing, and what makes me most bullish is that he's already delivered successful products in the past. He's a very, crypto native degen. He knows what's up, and he also knows how to build a product, not just from a product perspective in crypto, but also from a community perspective. He knows that if you want to get a good community, you need to get the community along the ride with you, which is exactly why he did a public sale for the NFTs, which, I mean, it's going to get turned into tokens, like read between the lines, guys. They're eventually going to get turned into a normal token, like for governance and whatnot. But essentially, he knows that you needed to get people involved from day one, and that's why everyone was able to buy here, even before the regulatory regime changed. Because if he was doing the sale now, I think it'd be very different, where he would still let everyone in, but it probably wouldn't be NFTs. He'd probably just sell a token, right? But there was that NFT thing done for regulatory reasons, I suspect, but essentially, he knows how to build a product in crypto from multiple different vectors here. So anyway, you can go give this a read. I don't want to shill my bags too much here, but I actually feel fine shilling this, considering that you all had the opportunity to get into this this sale, the same opportunity that I did. Like, there's no insider access here. There was no angel investment that I made here. It was literally made at the same valuation as the VCs, and everyone had access to this. Everyone had access to this sale, and I talked about this before the sale was live, and I told you guys to get involved with this. So that's why I'm kind of shilling this a bit harder, because as you guys know, I will only shill things where I feel like it was fair access. That's why I only shill ETH on here, and I only am bullish on ETH like on here, and Infinex now as well. There are other things I think I could shill, but I would say that majority of my portfolio as it exists today outside of ETH is from angel investments, right? So I'm not going to be on here and be like, hey guys, you go buy my angel investments, go buy my bags. No, I'm not going to do that. I've never been about that. You guys know that's not me. But when it comes to things like Infinex, where everyone had that fair access to it, I feel comfortable shilling it. That's kind of my take on things. Maybe you have a different view on this, but yeah, and also I feel comfortable shilling it because I actually really believe in the product. I didn't just invest in it because I wanted to make some money. I invested in it because I really believe that they can achieve their vision. I truly believe that. It's going to take a while. It's not going to happen overnight. It's probably going to take a few years, but I do think they can get there, and I think the opportunity is also massive. But anyway, on that note, I think that's going to be it for today's episode. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next time. Thanks everyone.